welcome to the Life Credit Union webinar series. We're delighted to be presenting with you today and to cover another very important financial topic. I'm Evelyn Brown, your coffee partner account manager at Consolidated Credit, and I'll be your presenter today. We also have on the line as a panelist Ann Wires from Life Credit Union, and she'll be available to share some important information for you, or to you, or with you as we move along. Okay, so hopefully you can see the screen clearly and we have good audio. So let's get
Welcome,
started.
everyone. It's Ann, and we're glad you're here with us. Thank you so much, Evelyn.
Okay, great. So let's go ahead and get started. So who are we? Just one slide to kind of give you a little background on who we are. We are Consolidated Credit, a nationally recognized nonprofit organization. We've been around for 25 years, just assisting families across the country with solving money management problems through education and financial counseling. And KOFE is a product of Consolidated Credit's financial education program. And so Life Credit Union has partnered with us with the KOFE program to bring you this great financial education webinar series. Some of the services we provide include financial education and wellness, counseling, seminars, free online tools, as well as debt management services and housing counseling. So we are excited and delighted to be here today to cover today's webinar, which will cover the top 5 money mistakes and how to avoid them. Everyone makes mistakes with their money from time to time. Everyone, no one is perfect, so we do have those situations come up, but when it happens, it can lead to problems. And these problems can easily escalate if we don't do the right things to correct them. So this seminar will provide some tips to help you solve money mistakes, common money mistakes that occur during a lifetime. And by the end of this seminar, we hope that you will learn how to address some of these common money mistakes, how to get started with a budget and a savings plan. We'll also provide some tips for dealing with medical and credit card bills, and also to raise awareness on what happens if we ignore financial issues. So our agenda today will focus on these 5 areas, top money mistakes. And of course, there are other areas where money mistakes may occur, but these 5 are the ones that we'll focus on today. Number 1, what happens when spending exceeds income? In essence, what happens when we're overspending? Number 2, what about the impact of not having a budget? We'll take a look at that in detail. Also, number 3, lack of emergency funds available and lack of a savings or savings plan. And then number 5, ignoring financial issues. What happens when we do that? What's the impact there? So I always like to start out with some statistics, with a few statistics that kind of set the stage for the topic that we'll be covering today. And some of these bullets are really eye-opening. The first statistics is that right now Americans on average are spending $1.30 for every $1 that they earn. In essence, we're overspending at about 30% or more than what we actually earn. And the average U.S. household credit card debt is over $15,000. And that's almost a third of the annual median household income in the United States. And that's pretty significant. 72% of Americans are living paycheck to paycheck, what can be defined as paycheck to paycheck, which can lead to an additional reliance on credit cards for basic living expenses. 70% of low and middle income, let me get back into the correct screen for you. There we go. Okay. 70% of low and middle income households reported using their credit cards as a safety net. And this has some overreaching implications when we do that. And then 33% of households report using their credit cards to actually pay for basic living expenses. And these statistics, they really all point to financial challenges that people are having that relate to our topic that we're going to cover today. And the key message here is to note that help is available for anyone who's struggling with managing their debt. And we're actually going to discuss some of those strategies today. All right, so let's go into mistake number one. And that is when spending exceeds income. In essence, overspending takes place. There are some key indicators of when we're living beyond our means. Typically, we're carrying high credit card balances or the credit cards are maxed out. We also see that savings is less than 5% or there's actually no savings at all. And typically, individuals cannot pay their bills on time. That's also another flag that lets us know that we might be on the overspending track. And typically, there's little to no money left at the end of the month. One of the things that we want to make sure that we understand as we look at these key indicators is that each of these have a significant impact on our ability to effectively manage our expenses. Each one of them in themselves is a red flag that, okay, it's time to maybe hit the pause button and take a look at how we're really managing our finances. So if you have even at least one of these that apply to your current financial management situation, it's time to hit the pause button and take a closer look at some of the options that are available. And one of the first places or things to do is to really understand, where does my money go each month? We will be amazed at just how much spending, even for higher income individuals, how much spending actually takes place or occurs. And this concept is something called the leaky bucket. This is where money is coming in, but it's also leaking out almost as fast as it's coming in. And we don't know where the money is actually going or how the money is actually being spent. And so one of the kind of foundational questions is that if you can't figure out where your money is going or how it's being spent, then it's probably time to just stop and take a look at working on a budget. Okay, the budget word here. And so we don't want a leaky bucket. So we really need to understand where our money is going and how it's flowing. And so there are a lot of myths about budgeting, but we want to make sure that we understand the truth connected to budgeting as well. Some of the myths include that, oh, if I do a budget, it's going to restrain and limit what I can do. Another common myth is, oh, it's such a chore. It's a big job to create it and to manage it. It's hard. It's something hard to create. And some people believe that it's just a waste of time to have a budget. However, none of those myths are true. A budget is not restraining and it won't limit your freedom. It actually does the opposite. It puts you in control of your finances and helps you achieve financial goals that you set. You also gain a better understanding of where your money is going and what you're spending it on. So that picture of that leaky bucket, what a budget does, how it benefits you, is that it starts to not patch up, but close out all of those leaks that are happening at the bottom of the budget so that your income stays in the bucket and it's not leaking all over the place. So here's a great example of how when we talk about financial goals as well, how budgeting can help. Okay. I had a coworker who used to spend about, you get about $100 a month on specialty coffee every morning at her favorite coffee place. And what she realized was that this daily coffee expense, one of those areas in her leaky bucket, as a result, she was spending over $100 a month just on this specialty coffee. So she made a choice and made a decision to start bringing her own coffee from home, and she put that $100 in savings for her financial goal, which was a vacation. And after just 8 or 9 months, she was actually at her goal of a fully paid vacation without credit cards or entering into additional debt. So this is a great example of how starting with a budget to let you know what's coming in and where the money is going is a great starting point to help you start to achieve your financial goals. So the second mistake that we can make concerning our finances is failing to create a budget. Okay. And again, when we don't have a budget, typically we have no control over our finances. And if there are financial goals that we have set or we're thinking about, we don't have a roadmap to get there. So you can begin to make better financial decisions with budgeting so that you know exactly where your money is going. And here's a quick tip regarding budgeting, and that is something called the 50-20-30 rule. The 50-20-30 rule. And this is where you want to allocate or think about allocating 50% of your income to your essential expenses, your housing, transportation, utilities, groceries. 20% to financial priorities such as retirement, savings, or reducing your debt. And then 30% to your lifestyle choices that involves uh, gifts, travel, dining out, shopping, those types of things. This 50-20-30 rule is a guideline that is used in budgeting to help to map out that roadmap and again to get a handle on where the money is going. Just a couple points here, and I know I'm spending a little bit extra time here on the topic of budgeting because it is so important. What is a budget? Basically, a budget can help you, again, manage your money more effectively, live within your income and not overspend, reduce your reliance on credit, there and therein reducing your debt, and helping you to save for the things that you want. Like my coworker who wanted to have a vacation, not knowing that she could actually afford it after she did her budget to see where the opportunities are. And with the budget, you have three different types of income, or I'm sorry, expenses to consider: fixed, flex, and flexible and discretionary. Fixed expenses are just as they're titled. These are the ones that don't change from month to month. They're necessary for day-to-day living, and they occur on a regular basis. These are the essentials for the most part: your housing, transportation, insurance, those type of expenses. Flexible expenses change from month to month, and you do have control over those, but they are also necessary for day-to-day living, such as your utilities, groceries, gas. Discretionary expenses are those that are is money that you choose to spend or save. It's up to you, and you control the amount of the discretionary spending. So these are just the basics of what is actually included in a budget. I like this chart because it gives a graphic of just some additional guidelines related to budgets and suggested percentages for spending. And you can use this slide to see how your spending compares currently to the recommended amounts. So if you're, for example, the recommended amount for housing is anywhere between 20 to 35% of your monthly expense. If your housing expense is greater than that, then that's something to note inside of your budget. And then begin, as you look through each of these categories, you begin to get a good uh, picture of your current status and where there might be some adjustments that need to be made. And of course, everyone's situation is different, but it's a good idea to kind of get a baseline on where you are and where to begin. All right, so my last few points here about budgets is that there are some key reasons why budgets fail, and people kind of get discouraged about implementing a budget. Sometimes we fail to prioritize expenses. Remember the 50-20-30 rule, where first of all we need to prioritize those essential living expenses, housing, transportation. Then look at our financial priorities, okay? Savings, retirement, and reducing debt. Then we look at the lifestyle choices third. So we need to prioritize the expenses so that we're not spending, 50% of our money on lifestyle choices and not tending to those essentials. Another reason that budgets can fail is we're not practical about the actual amounts that we're allocating for like essential expenses. Another reason is that sometimes we don't plan for the unexpected, and we're actually going to talk to this a little bit later in the presentation, but things like home and maintenance repairs that are unexpected, but we need to plan for that. And if there are also quarterly or annual expenses that we need to account for, we need to have those in view as well. And then, of course, we talked about spending more than you earn. That concept of overspending, it's one of those first big mistakes that we can make with our money that has long-standing impact. So if we're able to corral these areas or items and corral them into the budget, for the most part, we'll have success with utilizing it as a tool to manage our money. All right, mistake number 3, not having enough funds in emergency savings. Okay, we have found that there's been research done that shows from the Pew Charitable Trust, they did some research, and their findings indicated that 57% of Americans say they are unprepared for a financial emergency. 57%. There was another study done by NPR Marketplace, and they found that 58% of people said that they will find it somewhat difficult to pay an unexpected expense of about $1,000. Now we understand that savings is can be a hard or challenging thing to do, especially with all of the expenses and bills that we have. But without some kind of backup plan, many households risk going into serious debt if an emergency arises. So experts recommend having 3 to 6 months of your income as an emergency savings fund, and that it is only used for true emergencies and not something that we kind of dip into from time to time, but we really set this aside, these funds aside for true emergencies. And excuse me. And for example, in the research study that they did, and they asked individuals about how would they handle an expected expense of about $1,000 or so. Okay, a lot of people, even if you have a couple $1,000s on hand for emergency money, I mean, this may assist, if there's something, some travel you need to do for family or something like that, but it really it's not enough to tide you over if there is a long, long standing emergency that occurs in the family, such as someone gets ill or there's some other type of emergency. And some individuals have a lot more than $1,000 or two in in a savings fund. Say for an example, for someone who might have $10,000 available in their emergency savings, but in that example, say if they're making $50,000 a year, then that $10,000 can go very quickly if they find themselves in a situation where they can no longer work. So all of these are really kind of the reasons why we really need to set up a savings plan in order to start building an emergency fund and have that available. So if you have opportunity where your income increases, like with a raise, put aside that additional money in your emergency savings fund. Or if there are opportunities where some of your expenses reduce, then put that extra money aside in your emergency savings account. And it really starts to build up very quickly, which actually leads us to our next mistake that can be made with your finances, and that is a lack of savings or a savings plan. And
Evelyn, this is Ann.
Yes.
This is Ann. I'm sorry to break in, but I just wanted to share something unique that we have at Life Credit Union, and it's something that I use personally. At Life, you can divide your savings account and name those how you divide it into different buckets, but not leaky buckets, but good buckets that will hold your money for their intended purposes. For example, I have my savings account divided currently into 3 different buckets. One's an emergency fund account, as you said. A second one is set aside savings for expenses that fall outside of my budget or spending plan. And then one, now, Evelyn and those listening, it's going to take a long time for this one, but if I didn't have this separate, I probably never would get there. But I really want to go to Alaska. I want to take my husband. And one is for an Alaskan vacation. And even if I put $5 per pay period to that bucket, for example, eventually we'll get there. So Evelyn and listeners, and that's just one idea of what Life Credit Union has. And of course we have lots of other ways to help people save. So back to you, Evelyn.
Okay, that is excellent, excellent. And such a great, that's actually a best practice. Your strategy, that's a savings strategy, that's a savings plan that you actually spoke to. You have your financial goals there, and then you mapped out a game plan on how to reach those goals through savings. I love it. That's exactly what we're talking about. And it works. This is this is the great part about it, that it works. And actually, this third bullet here talks about or relates to what you were sharing. Sometimes it's better to go ahead and just set up like an auto pay from our paycheck. A lot of us have direct deposits, of our pay, and we can set that up with our credit union so that a certain amount automatically goes into our different savings accounts. And that makes it even easier for that savings to start building up. So I love that. I love it. And you'll have to send us pictures from Alaska when you guys go. So one of the other
I sure will.
Okay. One of the other strategies is the pay yourself first model. And this is also connected to that the auto pay. That is that You look at saving just as we have bills that are being paid. You look at savings not as a bill but as another investment. So your savings category goes right inside of that budget along with the rest of the bills you have. And we want to avoid like saving our leftovers. Sometimes, we wait till the what to see what's left at the end of the month and put that towards savings. But really, you want to have a certain category that says, okay, every pay period, I'm going to save this percent or this amount towards these goals, and that will help us get there on a consistent basis. And the experts actually recommend that we try to save 10 to 20% of our take home pay every year. And you have to look at your budget and see if your budget can afford a 10 to 20% in the savings. And if it can't, that doesn't mean that we do nothing. It says, well, maybe we look at a 5% or 8%, but to be sure that we have something that's going into savings as whether it's going into the emergency savings fund or our general savings account or some other financial goal that we have. Okay. All right. So mistake number five, and that is ignoring financial issues. Research again shows that people tend to avoid talking about money. It can get pretty uncomfortable at times, and sometimes we just pretend that the debt doesn't exist, but that really doesn't help us either. And silence in this case is not golden. Research, they found that the more we actually talk about it, the different, if we're having financial issues, the more confidence we have about it, and we're actually able to make better money decisions. And the research has shown that young people actually are better at sharing and comparing their financial wins and fails than other groups tend to be. So talking about money actually help us to be more informed and experience less stress regarding our financial decisions. And one of the key messages that we want to take away here is that if we're having financial issues, we really do have to address them. Though we know it's not easy, it's easier said than done, but we really do have to address it. And these can be addressed by talking with your credit union to see what options might be available where they can help you. Maybe you can attend a class or workshop at a local college. Many times they give free workshops in the community on financial topics. As a matter of fact, I just attended one this week on Social Security at my community college, and it was very, very informative. You can also just research topics on your own in order to get, better understanding, and then talk to your trusted financial advisors to map out an action plan. Now, some individuals decide to, they're going to just bury their head in the sand and continue to ignore the debt. But this is really not a good thing to do because your creditors, unfortunately, are not ignoring the debt. And once debt is being ignored for weeks or even months, the creditors do take record of that, and it may actually start to impact your credit history, and that's something that you want to avoid. So what actually happens if we decide that we're going to ignore debt? The problem is that it's not going to go away. Actually, ignoring the debt can make things actually worse. So you want to, again, try to take action and get some help. If you continue to ignore your bills or your debt, the debt can be passed on to collections agencies or even court for further action. So if you're facing debt for any reason and it feels very unmanageable, then get some help. contact your creditors or your financial institutions. Open up the lines of communication and let them know what's going on. You'll be amazed at how they actually will work with you to work out a payment plan, to help you develop a budget, to see how much you can afford to pay, and to get things back on course. Um, and this is something that will help to start to pay back the money, the debt that's owed, and also it gives individuals a huge sense of relief to know that okay, now I'm actually talking about it. I'm working with the creditor. I have a game plan now, to address this debt, and I can see some light at the end of the tunnel. All right, so the next couple of slides are just kind of a quick summary on a couple of areas we didn't touch on in the top five. And I want to talk about the second bullet here, emotional shopping. This is something, especially for the ladies, but not only for the ladies, that kind of hit us at times. And this is a, a big source of most of the personal debt that we see. I know in my field here, where we do the financial counseling, we see a lot of this occur. So one of the things is that you don't want to go shopping when you're bored, you're angry, or upset, because you may end up buying things you're rarely going to use, and most of the time, those purchases are made on credit. And you don't want to get into a situation where you're shopping to kind of make yourself feel better. Call up a friend, a good friend, and talk to them about it versus going to the mall and shopping. A lot of times we end up just spending money that we really don't have, and that was back to the first mistake where we start overspending. Or these funds we can actually put into savings instead of doing impulsive shopping. Another area I want to touch on also here is sometimes we have the belief that fixed income is our only option. That is our primary source of income from, our primary job is our only source. But if you find yourself where you're overspending and after you've done your budget, where you're on the negative side, you don't have enough funds for the month, consider part-time work or some type of other entrepreneurial type of activity that can create another revenue stream for you, where you can increase your income and at the same time you're patching up those additional holes on that leaky bucket. And part of that patching comes from looking at the expenses as well and seeing where we could actually reduce our expenses. So when we're able to increase our income, reduce expenses, we're able then to come up with a balanced budget. Just a few more points here. And on this slide, actually all of these bullets can impact your credit history. So one of the first things that has a huge impact on your credit score and your credit history is late bill payments. Good credit relies heavily on making payments on time. And this is typically one of the biggest mistakes that individuals can make, and that is paying bills late. Because in the calculation of your credit score, late bill payment carries like 35% of what makes up like your FICO score. So paying bills on time is so important for your credit history. And if the bill amount is just too large for your budget, then that's when you can consult with your creditor to see if they can restructure that debt so that it's a payment that you can afford every month and you make that payment on time. We talked about already too much credit card debt and again, not understanding the importance of a credit score or report. I want to just make a note here on that as well, because if your credit score is at a certain level, or the point that I'm making is that your credit score can also affect other areas of your financial makeup, so that many employers now, when you apply for a job, they take a look at your credit history and your credit report. For housing, if you're renting or planning to purchase a home, of course, they're going to look at your credit report. Even insurance, the rates of insurance and percentages of insurance, all of that is tied to your credit score and credit report. So at the same time that you begin to develop a budget for your monthly expenses and income, you also want to take a look at credit cards and take a look at your credit report and see how you can improve those areas as well. And all of this, again, is helping with your total financial management picture. Now, one of the other areas, and we're almost done, has to do with medical bills and debt. And many times this is a great big issue as it relates to debt management. One of the things that you may not know is that many medical professionals or offices actually offer payment plans. So if there's difficulty there, perhaps the co-insurance and things, left a gap there, doctors' offices and the services, medical offices, many of them actually offer payment plans that could help you to work out an arrangement based on how much you can pay that will help to settle that debt or repay that debt. Also, some of the hospitals have foundations, charity foundations, that also will help patients who needed the care, but then they come out of the hospital and they have a huge debt load. So many of the hospitals, it's worth it to go and speak with the case manager at the hospital to see what options might be available. And I think, Anne, you also wanted to share some comments there.
Yes, that's right. That we at Life Credit Union, like you said earlier, a few slides back, actually, Evelyn, but to reinforce that we encourage you to communicate with us if you're having issues, so we can work on solutions with you. And again, Evelyn, you said that, but thank you for letting me emphasize that. We do that all of the time at Life Credit Union with our members. We have free financial coaching for our members, and we are here to help the members. Now, on the personal bankruptcy, which you'll get to on the next slide, I believe, I'm going to speak to that. There it is. I'm going to speak to that right now, as you'll be getting to it soon. We know that bankruptcy is sometimes necessary, but there are better solutions. So I encourage people to, if you're a member of Life Credit Union, talk to us before declaring bankruptcy and let us help you look at other options. Or if you're, just talk to you, as you said, your other financial institutions, but talk with us, because there are often better solutions that don't have the long-term impact of bankruptcy. So it's our mission to help people, and we really want to and do that and strive to always let people know that we can.
That's excellent. That is excellent. And that's a great segue, because if you're dealing with not only credit problems, but any type of financial distress, these are some of the options that's available to you. Anne mentioned credit counseling that's available by contacting the credit union. And these are, you have organizations out there, even Consolidated Credit, that can advise you on managing your money and your debts, help you develop a budget, and offer education materials and different things that will help you. So the credit counseling is kind of, if you think about it, kind of like the first step that you want to take in order to start to get a handle on your financial and debt management situation. There are also another option out there that's called the debt management plan. And this is where the creditors, they may agree to lower interest rates or waive certain fees while you're making regular timely payments through like a credit counseling organization. And so in this case, the creditors partner with another organization to help you map out a debt management plan. Debt settlement is another option, and this is where you negotiate with creditors and they allow you to pay like a settlement amount to resolve the debt. But I have a bit but there on the debt settlement, and that is that it does have potential for a negative impact on your credit as well as some other consequences. So if you're going to look at that option, debt settlement, make sure that you have all of the facts before signing up. And then Anne was sharing about personal bankruptcy. This is bankruptcy basically eliminates or allows you to restructure the debt or eliminate the debt, but there are long-lasting and far-reaching consequences related to bankruptcy. So we wanted to, present these options for dealing with debt management problems. However, you need to go in and make sure you have all of the facts in order to make an informed decision. All right. So this is just a reminder here about credit reports, and we talked about earlier some of the impact of actions and how it impacts your credit report. You can obtain a free credit report at annualcreditreport.com. And by law, you're able to receive a credit report every year from all three of the major credit reporting agencies. And remember that your credit report information, as I shared before, it impacts loan qualification, interest rates, employers check your credit report, and housing. So make sure that you tend to and maintain your credit report as well as a part of your financial management strategy. And this is a great place to start. At the same time you're creating your budget, you want to go ahead and make sure to pull your current credit report from all three agencies, Equifax, Experian, and TransUnion. And you go to that website and you can pull all three of them at the same time. And that will give you a great view on your current status. Now, there may be a situation where you're actually dealing with a debt collector now. Okay, so if you have a situation where your debt has gone into collections, then they will be calling. But there are some rules that are in place and safeguards in place to manage that relationship with the debt collectors. So on the screen are some key bullets and points related to that. And if any of these are being abused or there's issues, then you can actually contact your state attorney general's office or your local consumer protection agency or the FTC and report any activity that's really, you know, out of bounds as it relates to debt collections. But these are just some general guidelines we want to share. And financial information, you want to make sure to try to keep your information secure as well. One of the big things I always recommend is move to e-statements or e-bill payments. That's a great way to get your financial information to streamline it rather and be able to build that relationship with your creditors online. And it just expedites and make things a lot easier and streamlined. So these are also just some tips. Okay, so finally, we want to wrap up with an action plan. And these are suggestions based on what we covered today that will help you to develop and create an action plan that will help you build a roadmap that you can start and get started. So one of the first things we want to make sure that go ahead and create and follow a monthly budget. We have in our handouts for this session a quick and easy budgeting worksheet that you can download, print it out, and work that through. There are also some worksheets that are available online as well. But we wanted to make sure you had something from the webinar today. So getting that budget in place is key. Then start building that emergency savings fund. A little at a time, put something away for car maintenance, home maintenance, if an appliance breaks down, all of the emergency things that might come up, so that you don't have to tap that credit card or start going into debt. Start a savings plan, whether it's for retirement or, like Ann shared, vacation, holiday gifts, a college fund for your grandkids. That's what we're doing. Or for home improvements. Getting that savings plan in place and consistently making those contributions, it's amazing how it starts to add up, and before you know it, you're able to achieve that financial goal. Another key point for your action plan is don't ignore your debt. Address financial issues and get some help. Contact your credit union and see how they can help you. And that leads to the last one, get the help, the professional advice from trusted advisors who are available and that are here to help you along the way. So this concludes our presentation for today, and hopefully we believe that you gained some great information from looking at the top 5 money mistakes and how to avoid them. And then I also, as we close out, want to leave some space for Ann from Life Credit Union to make some final remarks.
Thank you so much, Evelyn. And if you'll go to the next slide where it gives our website information and how to reach me, there you go. So I want to thank you, Evelyn, for leading our webinar today. Once again, you've done a great job. And, you know, I have the wonderful role, and I love that Life Credit Union invests in this, but I go out into the community in the Nashville, Middle Tennessee area and listen to people's stories, excuse me, about their financial situations, their personal bucket, if you will. And it's an honor to provide ideas of how we might support them on how to improve their financial well-being, which of course we know improves their lives. And it's often people find it beneficial to have someone help them develop their action plan, which you had, you know, on that slide. It's wonderful. It's daunting. It's overwhelming many times. But we at Life Credit Union, we invest in our members or customers, and we provide free financial coaching for our members. That is right, free. So you can contact me at the email indicated on the slide to learn more, because we want to help patch those leaky buckets. In fact, Evelyn, I'm going to get a bucket. I'm going to have my husband poke holes in it. I'm going to start taking it out when I go into the community to illustrate and have maybe money coming out, you know, because it is so good. Now, if you're fortunate enough to have money, extra money to invest, that's awesome. And we provide wealth management services too. So we invite you to go to our website, learn about the many ways we can serve you, and want to. So, and finally, I would be remiss if I didn't say thank you. If you are a member of Life Credit Union, we are celebrating our 60th year, and it's because of our members, of course, that we have been here 60 years. So thank you if you're a member or customer. And if you're not currently a member or customer of Life Credit Union, you are invited to join us. Please do. We would love to have you. Thank you, Evelyn.
You're very welcome. You're very welcome. And that's great information. Great information that's shared. So thank you for your time today. Please be sure to complete the survey that will pop up after you view the webinar. And we'll look for you next month in October. Thanks and have a great day.